WTF just happened to the housing market? Just 2 years ago, homes were flying off the shelves like the last bottle of water before a hurricane. Buyers were bidding tens of thousands above asking, some even waiving inspections just to get the keys. But today, we're seeing price drops, homes sitting longer on the market, and a sudden chill where there was once a feeding frenzy. So, what changed? Why is the housing market behaving like your cousin at Thanksgiving dinner, calm 1 second, chaos the next? And more importantly, what does it mean for you, your money, your home, and your financial future? It all starts with interest rates. When the Fed slammed the brakes to fight inflation, mortgage rates didn't just creep up, they skyrocketed. Practically overnight, the cost of borrowing doubled. Now, picture this, you've got your eye on a $400,000 home. A couple of years ago, with a 3% mortgage, that house might have cost you about $1,600 a month. Today, with rates hovering near 7%, that exact same house is closer to $2,800 a month. That's an extra $1,200 every single month, just for the privilege of owning the same four walls. For many families, that extra money isn't just uncomfortable, it's impossible. It's the difference between saving for college or draining your savings, between feeling secure or drowning in debt. And when buyers step back because they can't make the math work, demand collapses. Sellers, meanwhile, are stuck. Some slash prices to get attention. Others pull their homes off the market altogether, hoping to wait out the storm. But here's the twist, it's not just the buyers and sellers caught in this mess. Even if you already own a home and think you're safe, you're not immune. Because the real question is this, what happens when you need to sell one day, and fewer people can afford to buy from you? That's where the ripple effect begins, spreading across neighborhoods, cities, and the entire market. And by the way, remember when people thought a 3% mortgage rate was too high? Seriously, those conversations sound ancient now. Almost like the days when Blockbuster was still cool. Feels crazy, right? Here's the big question everyone's asking, will home prices crash? Right now, the market feels like it's standing at a crossroads. Nationally, we're seeing home values start to plateau. And in some of the most overheated cities, think Austin, Phoenix, Boise, we're already watching prices tick downward. Red arrows on the charts where just 2 years ago everything was shooting up. But before you panic, let's be clear, this isn't 2008 all over again. Back then, banks were handing out risky loans like candy on Halloween, and the market was flooded with foreclosures when it all came crashing down. This time, most homeowners actually have equity. They aren't sitting on flimsy foundations. Still, here's the problem, affordability is broken. Since 2020, median home prices have jumped nearly 40%, while wages have barely budged. Think about that, it's like running a marathon with a backpack full of bricks while someone keeps adding weight every mile. At some point, your legs just give out. Families across America are stretched to the limit. Young buyers are locked out. Even dual-income households with decent jobs are struggling to make the math work. And when affordability breaks, the market has no choice but to bend. So if it's not a repeat of 2008, what exactly is coming? The answer may surprise you. One reason the housing market hasn't completely collapsed is simple, there just aren't enough homes. After the 2008 crash, home builders got burned. They pulled back hard, and for more than a decade, we've been underbuilding. Meanwhile, demand kept climbing as millennials started families and cities kept growing. Throw in zoning restrictions, skyrocketing material costs, and supply chain delays, and suddenly, the shortage doesn't feel temporary. It feels permanent. But here's where it gets fascinating and frustrating. Millions of homeowners are sitting on ultra-low mortgage rates from the pandemic era. Why would someone with a 3% mortgage trade it in for a 7% one? That's like giving up a $1,500 monthly payment just to lock yourself into $2,800 for the same house. It makes no sense. So people stay put. This creates a bizarre standoff. Buyers can't afford to buy, but sellers refuse to sell. Imagine a game of musical chairs where half the chairs are missing and no one wants to get up. The housing market is stuck in the middle, frozen between two sides that can't move. And until something breaks, either rates, prices, or supply, this gridlock isn't going anywhere. There's also a massive generational divide unfolding right before our eyes. On one side, you've got Millennials and Gen Z, young professionals, newlyweds, families trying to take that first step into homeownership. But every time they run the numbers, they hit a brick wall. Sky-high prices, crushing student debt, and mortgage rates that feel like highway robbery. For many, buying a home feels less like a milestone and more like a mirage in the desert, always visible, but always out of reach. On the other side, you've got older homeowners, baby boomers and Gen X, who bought their homes decades ago when prices were a fraction of today's levels. They've ridden the wave of appreciation for years, sitting comfortably on a mountain of equity. Many of them paid off their mortgages completely, and some are even using their homes as ATMs, pulling out cash through equity lines. This divide is reshaping the housing market. Wealth is consolidating among those who already own property, while younger buyers are stuck renting longer, delaying starting families, and questioning whether the American dream of owning a home even applies to them anymore. But here's the real kicker: this imbalance isn't just personal. It's bigger than any single family. Over time, it could reshape entire neighborhoods, shift the character of cities, and even disrupt retirement planning for millions of Americans. Because if younger generations can't afford to buy in, who's going to be there to purchase the homes of the older generations when they eventually want to sell? Quick question: when did so-called starter homes start costing more than Ferraris? Seriously, asking for a friend. And then, there are the investors. Quietly, almost in the background, hedge funds, private equity firms, and big corporations have been scooping up single-family homes. What used to be the heart of American neighborhoods, the home with the white picket fence, is now being turned into a line item on a Wall Street balance sheet. For everyday buyers, this creates an uphill battle. Imagine walking into an open house with your pre-approval letter in hand, ready to negotiate, only to find out you're bidding against an all-cash investor who doesn't care about schools, neighbors, or community. They're not buying a home. They're buying yield, return, and cash flow. And here's where it gets dangerous. The more corporate landlords control the housing stock, the less power everyday families have. If these firms decide to sell, they could flood the market overnight and send prices tumbling. Or worse, if they decide to hold, they can ratchet up rents across entire neighborhoods at the stroke of a pen. That doesn't just hit families in the wallet, it reshapes the very idea of homeownership, turning what used to be the American dream into someone else's profit center. And yet, believe it or not, the biggest shift in housing might not come from Wall Street at all. The real game changer could come from Washington. The government is watching all of this very closely. Lawmakers know the housing market isn't just about homes, it's about families, communities, and the entire U.S. economy. That's why discussions around new policies are heating up fast. We're hearing ideas about rent control to protect tenants, tax credits to give first-time buyers a leg up, and even proposals to limit how many single-family homes Wall Street investors can own. On paper, these sound like solutions. But in practice, every policy comes with trade-offs. Think about it. Give first-time buyers a big tax credit, and suddenly demand spikes, pushing prices even higher. Clamp down on investors, and you might protect families in the short term, but you could also shrink the rental supply and drive up rents. It's like squeezing one side of a balloon, the pressure just shifts somewhere else. That's the tightrope Washington is walking right now. Move too fast, and you risk destabilizing the market. Move too slow, and affordability keeps slipping out of reach for millions of Americans. And here's the truth: the stakes aren't just about the housing market. Housing is the foundation of wealth in America. It's tied to consumer spending, retirement security, and even financial stability. One wrong policy move could ripple through the entire U.S. economy, touching not just buyers and sellers, but everyone. So, WTF just happened to the housing market? Here's the truth: it's not a crash. It's not a bubble bursting. What we're seeing is something bigger, a transformation. The rules are changing, the players are shifting, and the game isn't about luck anymore, it's about strategy, timing, and adaptability. If you already own a home, don't panic, but do pay attention. Protect your equity, understand your options, and plan for long-term shifts that could affect your neighborhood and your financial security. If you're trying to buy, it's all about patience and smart strategy. You might have to adjust your expectations, shop smarter, and move when the timing makes sense. Rushing in out of fear could cost you more than you think. And if you're an investor, the stakes have never been higher. Location, timing, and government policy will dictate returns more than ever. Knowing the landscape before you make a move isn't just helpful, it's essential. Bottom line, the market is evolving. But in times of uncertainty, the people who educate themselves, prepare carefully, and act thoughtfully are the ones who come out stronger. The chaos might feel scary, but it's also an opportunity for those who stay informed, alert, and ready to adapt. The housing market has always been a cornerstone of wealth in America. But the landscape has shifted, and waiting on the sidelines isn't a strategy, it's a gamble. So let me ask you, are you going to let fear dictate your future? Or will you turn knowledge into power and uncertainty into opportunity? If you want to stay ahead of these changes and build a financial life that thrives no matter what the market does, make sure you hit that subscribe button, turn on notifications, and join this community of forward thinkers. Because this isn't just about houses. It's about securing freedom, stability, and the life you've worked so hard to build. And trust me, the story of the housing market is just getting started.